morning, it's Quant Trade Edge, and here is a rare morning video with, perhaps actionable information. So this is a chart of crude oil on the hourly, and you see how it bottomed here, had a big consolidation here, which broke higher, and now we're consolidating again on the hourly, and it's above this key resistance breakout level. So, again, this is a fairly tight range, and it's starting to get pretty mature, and, we want to defer to the trend here. I think higher is the next direction of the breakout, and you can also tell by zooming in on the mechanics of this actual breakdown. You can see how these tails here, so first time it was able to get down here, tested, left a big tail, got up there, it got up higher to the top, small tails, and then here it again just this time it actually got down to the bottom. Here it could only tail to the bottom, and then a higher low, and we're kind of heading in that direction. So it could technically break either way. I would really think that, given that the trend is already up, given the nature of this consolidation, I think it's probably going to break higher. And then one last thing to look at on a pit chart. This is the daily pit chart, and we're 3 minutes away from the pit open. But, a couple of things. One is we did get, I put the GAN on here, let's see. We did get a very tight ABC down. This is a down, up, down. Granted, this up was a little bit higher than there, but this actually reminds me a lot of the, the hourly here looks like the daily on Amazon. Yesterday Amazon broke out from this same type of consolidation with a little bit of a higher move over here. But sorry, my point on this here, in addition to that tight ABC, is we're going to have a true gap up. The high on the pit was 81.52 yesterday, and it looks like we're at 81.67. So true gaps up can be trendy. You can do a 1 minute opening range breakout, a 5 minute opening range breakout. For me, I'll probably pick the time frame that works in the long direction because I'm biased to that. But technically, it can trend either way, right? It can gap up here and then come back into range. That would be very normal for that to happen. Or we can gap here and go higher. And just looking at, kind of intermarket analysis, we've sort of got the S&P now in a 4-day hoagie. This is nice and tight. So, and again, deferring to the trend, I would expect this to want to break to the upside. And given that our recent sector rotation has really come into oil, I think that trend will continue to the upside. This is the XLE, and as you can see, we get into the top of that trend line, or, it's really like a trend channel. So, breaking above here, would help XLE get going, and it would probably only happen if crude oil got going. So that's that. We're a minute away from the open, and there's your pit opening bar right now. Good luck with it.